Good morning, ladies and gentlemen. This is John Randall, Regional Director from GoldenCare USA. And sorry we're getting started a couple minutes late, but that's okay. We got two professionals on the other end, and they will make sure we don't go too far over our time. We have Joe Dunford with us, who is our internal wholesaler for GoldenCare USA. He's been with Newman for 10 years, which is Thrivent, and he's been in the insurance industry for 27 years now, so he's a wealth of knowledge. And heading our presentation today is Anthony Vossenberg. He's been at Newman for about 7 years, and he's been in the long-term care industry for over 15 years plus. Both very strong. They know this product inside and out. Good friends of ours. They're right down the street from us. And we've been doing a lot more in collaboration in the last few years. So without any further ado, I'm very excited to get started today. And thank you, Joe, and thank you, Anthony. And I will pass it over to you and let you guys take the reins.
Thank you, John, and thank you, Lynn, for helping set the stage for today's discussion. Folks, we're really happy to be part of your meeting this morning. We're excited about talking a little bit about Thrivent, maybe giving you a little more insight into our organization, and also helping you better understand how we play in the extended care or long-term care space, which I think today we would say we're very well positioned with two very strong product solutions. And our goal today is to give you a better understanding of when you might give real consideration to using Thrivent as a solution for one of your clients or potential clients. So again, thank you very much. GoldenCare is an important client relationship for our company. We really enjoy working with this firm, and we're hoping to get to know you better. So with a little luck, over the next 40 minutes or so, you will gain a little bit of insight that will be of value, and we'll be sending you some follow-up material for your own review. So I always start off presentations. Joe and I work very closely together. I'm responsible for long-term care sales, and Joe is my counterpart who does a lot of work supporting GoldenCare and knows the products very well, does a lot of case design, illustration work, just a great resource, and knows all the products, frankly, in the marketplace. When I say that, I mean the traditional solutions and the linked benefit, or sometimes called hybrid, or sometimes called asset-based. Those three names are the same product, the life LTC combo products. We have one. We'll talk a little bit about it today. I really want to make sure you understand when we are the right solution for your client's needs. So, of course, today is really designed to be educational. It's designed to help provide information to you. I'm not intending to be providing advice, and that's the extent of my disclaimer today. So we'll go on to the next slide here. And I'm going to start telling you a little bit about Thrivent. We're not necessarily nationally known across the country, but allow me to share for a few minutes the background story on our organization, because we are really a unique company. First, if you know Thrivent, you'll know that we are a not-for-profit fraternal benefit society. Back in the late 1880s and 90s, fraternals started to pop up in the U.S. and they came about largely because there was massive immigration going on at the time, and people that were migrating, I would say primarily from Europe, entering the U.S. marketplace, believe it or not, could not acquire basic banking services. And that led communities, whether they were church-driven, whether they were pockets of people that came from one part of the world that stuck together. They were communities that started to build almost in the way that we learned how the life insurance business was created. People came together and said, if we can't acquire these services, we'll create them for ourselves. We'll create a network, and we'll receive benefits and support our own people, if you will, that had some common bond. And for us, for many years, our common bond was supporting or built around the Lutheran community. And then in the early 2000s, we moved our common bond to serving Christians in the United States, and that's about 70% of the marketplace. So our common bond is Christianity. Within our application, there is a Christian attestation. So clients who want to purchase insurance from Thrivent must sign a Christian attestation. You do not need to be Christian to represent Thrivent, but certainly you do to buy insurance contracts. We're member owned, so our clients own the company. We are not a stock company, and we think that provides some very unique benefits. And as a fraternal, and we won't get into this today, but if you purchase an insurance product from Thrivent, you receive member benefits. And some of our member benefits are really wonderful. And it creates a lot of stickiness in the relationship between our clients and Thrivent. So that's important to know, because I would tell you that our retention of business is probably quite a bit higher than the market in general. And for an agent, persistency of business is pretty important, right? All right, so next slide, we will talk through a little bit about our company. We have 170 billion in assets under management. Our ratings, we are an A++ company. We serve over 2.4 million clients. For, gosh, more than 10 years, we've been rated by Ethisphere as being one of the most ethical companies in the United States. I will tell you a couple other highlights that I think are really important. This is particularly relevant if you're dealing with a client who places a lot of importance on the financial stability, the financial ratings, and overall financial strength of the financial institution that they're dealing with. We are a not-for-profit that happens to have about 16 or 17 billion dollars in surplus. A plus rated, and our Comdex score, if you're familiar with Comdex scores, there's only 2 insurance companies in the US market that have a Comdex score of 100, and we're one of them. So we have probably the best financial records, strength story of any insurance company that we could point to. And if that's important to you, I want you to be aware of that. We'll just move on if we could, please. We can skip through this as well, thank you. And we'll go to the next slide. So what I'd like to do is now is kind of just tell you a little bit about our long-term care history. I know that most of those who are on the line today have experience talking to clients, marketing long-term care insurance. We have been in the business for a little over 35 years. We are a merger of 2 companies, Association of Aid Association for Lutherans and Lutheran Brotherhood, 2 Fortune 500 companies that merged in 2001 and ultimately became known as Thrivent. And in 2012, we launched our new long-term care product under the brand Thrivent. And our most recent product series that we offer today, I'll get into that product in a few moments, was launched in 2016. I'm not anticipating any pricing changes in the immediate future, although I will share there is some chance that we'll modify our premiums on our California-based business. If you do business in California and you've looked at the marketplace, you'll know that our pricing in California is significantly more competitive than anybody else in the marketplace. Arguably, maybe too competitive. But right now, we are really pleased with our pricing, and I would say we're highly competitive. On a national level, I'll make one exception. We do not do business in the state of New York. We'll go to the next slide, please. All right, so let's talk a little bit about Thrivent and its product solutions. And what I'm going to try to do is give you an overview of the product, but I'm also going to spend some time highlighting why and where you should consider us. In other words, what are our differentiators? What makes Thrivent and when does it make Thrivent the preferred choice for your clients? And we'll help you a little bit understand some of our underwriting advantages and some of the unique benefits of this product. So first and foremost, I want you to understand that the biggest part of our business is selling and marketing a traditional long-term care product. That continues to be our lead product. It is, in my view, the leader in the industry, but we felt it was really important to enter the linked benefit or hybrid space. And the reason for that is this: we do not believe that one single product is designed to meet the needs of every single client. So I'll tell you personally, I love it when I meet with advisors or agents who sell a mix of traditional and linked benefit product, because it tells me that they're trying to line up a solution that is best fitted for the given client need and profile of client that they're talking to, right? Like if the client is really concerned about future rate actions, or they really care about, listen, I need to know that if I don't have a claim, that I'm able to get my money back. Like there's certain types of people that are better suited for a guaranteed product versus somebody who is really saying, hey, listen, I want to only focus on long-term care. That's all I'm trying to solve for. I'm not looking for additional life insurance, or premium duration might make me a factor in their selection. So, or partnership might matter, or shared care might matter, which you can only get through a traditional product. So really understanding the client should help us identify the product. We are the only carrier that plays in the independent space that offers both hybrid and traditional. And that's one of the unique benefits of working with our company. So the first page here is pretty basic, right? Our long-term care product is really designed to provide for benefits, home health care, which is obviously today the biggest driver of where people want to receive care, residential care facilities, adult daycare, memory care facility, nursing homes, and of course the product is federally tax qualified. Mentioned already, we don't play in New York. We'll move on and get into more of the meat of the product. All right, here's our product at a glance. We issue our contract from ages 18 to 79. Our average age client is 57, which I'm actually pretty happy about, because not too long ago, our average age client was in their early 60s. Sweet spot, of course, for long-term care, in my opinion, is age 50 to 65. Look, we'll go up to age 79. We're not selling a lot of clients that are in their 70s. Yes, it's available, but as you know, typically as people get into their late 60s and 70s, they start dealing with health impairments. And we really want to get to clients and start talking to them about long-term care planning when they're in their 50s. And one of the reasons I say that is not only because of health. It has a lot to do with the fact that we believe that no retirement plan is complete in the absence of a plan for extended care. The biggest blind spot people have in their retirement planning is that they haven't addressed long-term care. And unfortunately, too often, that's an area that is missed, and it has a significant impact on retirement planning. So our view is once people are in their 50s, we want to make sure that they're starting to talk and consider the impact of extended care on their retirement planning. And that's the ideal age to be really talking to people. We have a 5-year rate guarantee in our product, which I happen to really love, particularly if a client wants traditional, but they also have a little bit of concern about future rate actions. Look, I didn't highlight this a moment ago, but in our 35 years in the business, 35 years selling long-term care, Thrivent has never had a rate increase on its paper. Never. Now, we've only had it on our paper since 2012. But if I go back and I take our former company name, if you will, and take 35 years of experience, we had one rate action in 2004. 20 years ago was our last and only rate action. I will tell you today, I will say this all day long, when it comes to rate stability, there's no better company in the market. We have a 5-year guarantee. If a client wants to really be conservative in their approach, they design their product with a 10-year premium structure, and 5 of those years, they're guaranteed no premium increase. We have an elimination period. Typically, clients choose 90 days, but I want you to be aware that if a client has a day of service, in other words, you know, they're receiving 1 day of service at home, we count 1 day of service as 7 days towards an elimination period. Set it maybe easier. If you have a client that needs just periodic support, if they had 1 day of care for 13 consecutive weeks, they would satisfy a 90-day elimination period. That's a pretty cool benefit. We offer benefit periods from 2 years to 8 years. Minimum monthly benefit is $1,500, and we'll go up to $15,000 a month. That is the highest in the market, which means that, you know, we are marketing this solution to middle market and affluent clients. We'll talk a little today about the flexible increased benefit, which I think is super cool, and our automatic inflation benefit options. Your inflation riders, we offer 1%, 2%, 3%, and 5%. 3 is most popular, 5 is becoming more in vogue. And as I mentioned earlier, we have a 10-year pay period. So we have all pay and 10 pay with our traditional contract. Next slide, please. All right, thank you. We'll just go through this very quickly because I want to get to the most important slides. So these are common benefits you'll see in a contract. Respite care if the caregiver needs a break. You know, obviously we pay for equipment and home modifications, caregiver training. We have an international care benefit. The way that works is if you have a client that is, for example, traveling overseas and they experience an event, our goal is to get them back home. And so we will provide 2 months of their monthly benefit to give them sufficient dollars to deal with their immediate needs and ultimately help them get back to US soil. It is not intended, it's not intended for those folks that are looking to permanently move to another part of the world. Next slide, please. Okay, waiver of premium. I'm going to talk to you about a really cool feature about our waiver of premium. Joe, you make sure I don't forget to talk about what happens in a spousal coverage if one person goes on waiver. Okay, that's your task, my friend. Oh, okay. Care coordination services. We have industry-leading care coordination services. I don't have time to get into it today, but I promise you, if you want to learn more about what we do for people who are not on claim or on claim, one of our member benefits is an industry-leading care coordination benefits that are just unbelievable. And then bed reservation up to 60 days. Okay, let's get into the core benefits of this contract. All right, who qualifies? We have a couples discount for married couples, but married, it goes beyond being married. We handle and cover state partners, civil union, domestic partners, as couples. 2 individuals living together for at least 3 years in a committed relationship as partners or family members. You could have 2 brothers, 2 sisters, still qualifies as a couple. As long as that they meet the 3 years and they're not married, we're good to go. So our couples benefit.
I did a couple sisters, twin sisters that were living together, and they got the shared care rider and all that stuff. So I was kind of
that's awesome. And Joe, what kind of discount did they get?
Well, they get a 20% discount.
That's correct. Thank you. That's pretty significant. We'll go on to the next slide. So we have a very generous or attractive couples discount. We'll go on and tell you a little bit more about the important riders in our contract. If somebody is buying long-term care from us, and if it's a couple situation, and we're insuring a lot of singles. Probably in the area of 20 to 30% of the business is on singles, which is very interesting. to me, but couples is where we tend to focus. We have a preferred health discount of 10%. We have a couples discount of 20%. But I want to be clear on this. If one member of a couple is declined, the discount drops to 5%. Okay? So they could technically qualify for a 30% discount. Next slide, please. I'll go on to the next slide here. I want to get to more meat here. Okay, I want to talk about this rider, sometimes overlooked, but is a really, really cool rider, especially for people who are looking to start small and build over time. And I'm going to highlight the really uniqueness of this benefit. It's called the flexible increase benefit. It cannot be purchased if a client has bought an inflation rider. So if you've got an inflation rider of 3 or 5%, this would not be available. This structure has a very different approach to providing an inflation guard, if you will, and let me explain how it works. All right, so the flexible increase benefit is offered to a client every year. It offers them an automatic increase of 5% in monthly benefit. They can choose to accept or decline that offer, but it'll be made every year unless they decline it for 3 consecutive years. If they decline it for 3 consecutive years, it's no longer offered. But let me show you graphically how this plays out. So here in this example, we have a client who is 50 years of age, and they purchased this rider. Now, you might say, why would somebody buy this rider to begin with? Why not just buy a 3% increase in? Well, what we find is one of the beautiful things about this particular rider is how it performs at claims time. So let's look at this client, age 50 through about 57. They take a 5% increase every year. They pay for that additional coverage at attained rates and non-medically. All right, so they're guaranteed additional insurance every year with no medical evidence. The blue bars will show you the years in which they said, no, I don't think I'll take it this year. Don't want the extra coverage, don't have the extra premium, no thank you. And you can see at age in their early 70s, they decided not to take the rider any longer, but their monthly benefit started at $5,500, and now they're at $15,000. They've hit our maximum benefit. They no longer receive and want this increase. And the gray bars through age 80, no increases were offered. At age 80, the client goes on claim. What does Thrivent do? Thrivent automatically bumps up their coverage by 5% a year during claim. So we have some advisors who have structured their solutions that the client is taking advantage of this 5% increase every year, or every second year or every third year, to grow the policy over time and ensure that if their client ever went on claim, they'd automatically see the benefits go up by 5% a year, which is a really interesting way of looking at things. My point that I would share with you folks is that we have a highly competitive price product with rich benefits and riders, which allow you to be very creative in your case design. And I love the ability as an advisor to be able to be creative in solutions. We can be as very simple, or we can be as very creative as we like using the Thrivent product. Let's move on, please. All right, this we'll go through very quickly. This is I mentioned earlier, our annual increased benefit rider. It's the inflation rider, 1, 2, 3, or 5%. I said 3% is most common, compounds annually. Next slide. All right, shared care benefit links 2 contracts together, which means for all intents and purposes that if one person goes on claim and uses up all of their benefit, they can start using their spouse's benefits. So let's pretend that happens, And let's pretend that at some point in time, all of the benefits from both contracts have been utilized. And now the let's say surviving spouse has no longer any benefit left. We will allow a client to purchase their own insurance contract in that scenario and buy a 2-year benefit up to age 85. And that's a unique feat. That's a unique benefit for Thrivent, and we allow it on a non-evidence of insurability basis. That's a very cool privilege. Other thing I would share with you is that if we have a husband and wife, for example, who purchased insurance, same contract, and one person goes on claim, the waiver clicks in for both contracts. So even the healthy insured's contract goes into waiver mode, which is another unique feature. And since we're selling or working with a lot of couples, I would suggest that's really a cool feature. Next slide, please. All right, I want to talk a little bit about underwriting for the next 5 minutes, and then I'll just give you a sneak preview into our linked benefit product. All right, so we get asked, Joe and I, often, where are your competitive advantages and where should we think about Thrivent? And I like to think about this in 2 ways. One, underwriting does matter. I do think that generally speaking, particularly on the traditional side of the house, underwriting from one carrier to another is relatively similar. I think every insurance company has its own niches. You know, like we'll do some things a little bit better than another carrier and vice versa. And, you know, what I want to do is highlight some of the things that I think make us particularly attractive. This is sometimes hard to remember, but we're going to provide you with these slides so you can have reference points later. And I won't go through this all in detail because I think, first of all, it'd be very difficult to remember, but Hodgkin's disease. We tend to underwrite people who have Hodgkin's disease perhaps a little more favorably than our competitors. Osteoporosis would be another health impairment that Thrivent has a tendency to underwrite maybe just a little bit more favorably than our competitors. Next slide, please. Early onset, dementia, where both parents or one parent and another close relative, sibling, aunt, uncle, grandparent diagnosed with Alzheimer's disease prior to 65, or death from AD prior to age 70. So I will tell you, if you have somebody that is suffering, they have a family history, or they have early onset dementia, it's not an automatic knockout. Now, if there's comorbidities, of course, it's going to be tougher. All right. So another thing I would also share with you is that we will underwrite people who have not gone to see a physician or a family doctor in over 2 years. That is not always the case in the marketplace. Pregnancy, we insure people who are pregnant as long as there's no complications. Not everybody will do that. We are, I think, a little more favorable for your clients who have diabetes. All right. So if you have a client that has you want to ask them about their A1C levels, if it's 7.5 or lower, it's not likely going to turn into a decline. Okay. So if they have it controlled, that's business that we are going to look at. We're likely going to underwrite. And then Crohn's disease. So these are the health impairments that I would say, if you have a client that has one of these impairments, I want you to think about Thrivent as a place to do either a pre-qual or a formal application with. Next slide, please. And we'll go again. So in summary, when and where to use Thrivent. First and foremost, our pricing is very competitive. We offer a 0-day elimination period for home and community care. We're very, very competitive in Florida and California. And I would also suggest To my knowledge, we're the only carrier that offers partnership or partnership eligibility in the state of Indiana.
Yep.
Our 5-year rate guarantee is beautiful. We're highly competitive with women, and we're super competitive with younger couples. Don't forget, we have a 10-pay option. Our shared care has a residual benefit and has, as I mentioned, a dual waiver of premium, attractive inflation features, couples discount, and we have industry-leading caregiver resources. All
I
right,
would say our
that's
mail rates are really good too, Anthony. Our mail rates are probably the best in the business right now too.
Thank you, Joe. And you would agree with Florida and California?
Florida is amazing. You mentioned California, maybe someday considering a price adjustment. I think they'll probably look at Florida a little bit, possibly that too, because we're literally 30% less than other competitors in Florida.
Okay, thank you, Joe. That's very helpful. And if anybody on the line is wondering, particularly in a market in the last, several years that has been plagued by rate actions, as a result of products that were not priced properly. When carriers are looking at rate actions, what they're doing is they're looking at the performance of their in-force block. And if they're suffering losses, they'll go to the state insurance commissioner and file a request for a rate action. I can tell you we're happy with the performance of our in-force block, and there's nothing on our radar screen pointing to an in-force rate action. We're happy with our performance of our in-force, and we're happy with our performance of our current product. And I think if you're selling, marketing, and looking at traditional long-term care and you haven't looked at Thrivent, I would really encourage you to look at our competitiveness. And I think you're going to be really happy with what you see. But again, I point out, we serve the Christian marketplace. We're not for profit. If you need help discussing, like, how do I position Thrivent as a not-for-profit serving the Christian market, we have some great wording and language for that. If that for you requires a little bit of help from us, reach out to Joe. We'll help you with that. It's not that big a deal when you've learned how to position it properly in 2 or 3 sentences. I would say the vast majority of our clients, it's just really not an issue. Now, in all due respect, if you're working primarily in a Jewish marketplace, Thrivent's not going to be a great fit for you. Okay, but I would say for 70% of the market, we're an excellent solution. So let's move on quickly. I'm going to just do a time check and ask John and Lynn, can you just define how much time we have left?
I feel as though we've got some time. I know you'd planned to just do a super quick overview on Care Forward. It's another very strong solution. Like you said, you're one of the only carriers that actually offer both the traditional as well as that linked benefit or hybrid product. So it's up to you.
Let's if it's okay with you, I'd like to take maybe 5 to 7 minutes, and then we'll take any questions.
Sure.
All right, let's do it. Let's move into the other deck here, and we'll just move a little bit through this quickly. But I mentioned to you, and as Lynn just reiterated, we do have a hybrid product. Now, in the spirit of transparency, what's really awesome to me about the long-term care business today, I might be a little bit different in thinking than some people in our industry. I think the long-term care business is in a better place than it ever has been before. Some people will say, well, there's insurance companies that have, come and gone, and there's fewer companies selling traditional long-term care today, and that casts not a positive. I feel differently, very differently, because I know when the insurance industry deals with issues and challenges, it leads to new creations, new products, new solutions, and that's what the industry has done. We have today products, we have riders added to life insurance contracts, we have hybrid products that didn't exist 10 years ago, we have traditional products. There's the amount of product available in the market for long-term care today is abundant. We have awesome solutions. We have choices today that we never had before, and the long-term care business is strong. What I would say is we've learned from past mistakes, and our industry has great stability today. We can't make up for mistakes that were made 20, 25 years ago, but boy, we're in a good place today. Our Care Forward product was designed to provide more flexibility, more simplicity, to help clients who really wanted to. In my mind, this is really for two sales situations. One, a client that wants an alternative solution for long-term care that gives them guaranteed premium, that gives them benefits no matter what happens. It's sort of solving for, what happens if I die? Well, here's how this plan would work. What happens if I don't want to be in this contract any longer? At some point in time, well, we have cash surrender value. Our contract is built on a whole life chassis, so there's cash value. What if I have I experience a long-term care event? Well, there's long-term care benefits. But what it also is attractive to a client, in a lot of long-term care, like linked benefit product has been sold to clients ideally for the purpose of long-term care, but sometimes it's been a leverage play. You have a client that's got $100,000 sitting on the sideline. I like to refer to it as lazy money, that they generally have no purpose for. It gives us an opportunity to sit down with somebody and say, hey, we have an alternative solution for that lazy money that you have sitting in your bank account getting 1% interest. What if we were to bridge this money, roll this money over to a program that would do the following? That would provide you with, and I'm using this example, 100 or more thousand of death benefit, which really becomes a legacy asset. It would provide you with cash value of X, Y, and Z over certain periods of time. And if you had a extended care event, it would probably give you 2, 3, 4 times the amount, meaning $200,000, $300,000, $400,000 of long-term care benefit. How does that look compared to the $100,000 you have getting 0.5% or 1% in the bank account? A lot of linked benefit is sold on that concept. But for us, what we tried to do with our design, and here's what I would suggest to you. In simple terms, you want to think about Thrivent as a long-term care solution when you have a client who, wants a product that has guaranteed premiums, wants a product that's going to provide benefits no matter what happens. But what makes us different? I would say 2 or 3 things. One, we are particularly competitive at younger ages. We are less competitive at older ages. That says some of our competitors look more attractive when they're dealing with clients that are in their 50s and 60s. If you're dealing with clients that are in their 30s and 40s, Thrivent's going to look really good. For clients that like doing a single pay, so if you're doing a 1035 exchange or a client is moving lazy money from the sidelines, you want to think about Thrivent. And then lastly, I would say for clients that are primarily focused on their long-term care benefit, we look very good. So typically on the long-term care benefit pool, we look better than our competitors. For death benefit and cash value, typically we don't look as good as our competitors. So if you're looking for a well-rounded product that's going to give them a real attractive death benefit, cash value, and long-term care, you're probably going to find more competitive solutions in the market. If your focus is, I'm solving for long-term care and I want to provide the greatest amount of long-term care benefit for my client, knowing if they want liquidity, knowing if they were to die that they would have a death benefit, that's the kind of client that is attracted to Thrivent. And I would also mention this. There are a lot of consumers out there today who care about the financial strength of the institutions that they're working with, particularly on financial products that have a long tail end risk, right? If I'm buying a product that I see having for 2 or 3 years, I'm not as concerned. if it's really easy to move out of a product into a new product because there's no underwriting, like it's a MIGA or it's a term deposit, and I don't make the best decision in the first 3 years, I know I'm moving it in 3 years. It's not a big issue. But when you're talking about products that are going to provide benefits for people 20, 30 years down the road, the selection of carrier matters. Now, the good news for all of us is that the vast majority of insurance companies in the long-term care space are really solid financially. They're going to meet and pay their claims. We are not the only great insurance company. But because our story is so strong, for those of your clients that are particularly caring about the financial strength and ratings, you can't overlook a Thrivent. So I'm going to stop there and let you, and just reinforce, we have 2 products. They're designed for 2 different types of clients, and we are very committed to the long-term care space. We love working with GoldenCare. We would love to support you in any way we can, and we are hungry to continue to grow our long-term care business. We have no capacity limits, so we'll take as much as you want to bring to us. Thank you for your interest in Thrivent. Thank you for your partnership. Any questions, folks?
I do actually have a question submitted, but I first want to remind everybody too, we will be sharing copies of these slides after the fact. So some of those highlights that we see on Care Forward at the moment, some of the additional information, it'll be included in those slides if there is additional interest. So be on the lookout for a follow-up email afterwards. As for the question that was submitted, the Christian attestation, is that also on the Care Forward product?
It is. So that Christian attestation will be within both of our solutions. There is a question in the application, and we can include this as part of the follow-up. We can send you an examples if you'd like to read what the Christian attestation, how it's presented. And then what we'll also do is we'll give you words that we use to introduce the Christian attestation. Look, I understand that, I was an advisor for 10 years of my life, and I can promise you that not every interview I had an understanding of what the religious values and faith of a client was. I, generally speaking, did not combine discussions around faith and finance. But sometimes you just happen to know the religious background of a client. As I mentioned, 70% of US citizens consider themselves to be Christian. But I think it's something that you should position before you're presenting a solution and before you start taking an application. The last place you want to find out whether the client is Christian or not is at the time you're taking the application. That could be awkward. So one of the things that I often say to my clients is, look, I represent a number of insurance companies, and one of the companies that we particularly like happens to be focused on serving the Christian community. Is that a company you would like me to consider as I look at appropriate solutions for you? That's how I position it. And if the client says, yeah, that's fine, they're pretty much telling me they're Christian. So if I don't know that they're Christian, because I don't know what church they may or may not go to, I'm going to ask that question somewhere. Hey, now that we've reviewed your needs, and in that we have agreement that we're going to build a plan for extended care, and the plan needs to be funded. And we know that, personally, our philosophy, we like co-insuring risk, different philosophies, but our tendency is to do a 30-70% split, with 70% of the funding being deferred to an insurance company. And when we do that, we will often say to a client, look, when I'm building a solution to fund your plan, one of the companies that I would like to look at, who is particularly competitive and attractive, happens to be one that's a non-for-profit that serves the Christian community? Is that a carrier? Is that an insurance company that I should consider when I'm actually doing preparing your plan for you? That's how I handle it, and generally speaking, it's a non-issue.
And if you're talking to a couple too, obviously, one of them needs to be a person of Christian faith. The other person, maybe they are not Christian, but if one of them is, they can still apply and become a member.
Yeah. So, hopefully that answers your well, it does answer your question, but we'll give you some more context by sending you some follow-up material. But thank you for that question. It's a really good one, and it is something that's different about us. And I would tell you, our Christian attestation is a major league strength, and it's also something that causes us not to get business, right? 18% of the population loves our mission and values and loves the fact that we serve the Christian community because they view us as an affinity play. But there's probably 15 to 20% of the market that would view themselves as either atheist or Jewish or Hindu or Muslim that would not be attracted to a company like us. And by and large, I would say 60 to 65% of the marketplace couldn't care less. They just want to know they're working with a qualified agent and are buying insurance from a company that has very good product solutions and financial stability.
Good. We do have another question. Somebody asks, so do the plans offer service day or calendar day elimination?
Joe, you want to take that one?
Calendar day elimination. So once that first day of care, the clock starts ticking after that first piece of care they're getting. So it's a calendar day.
Okay, it sounds like they were interested on that answer for both products, actually. So traditional LTCI and the Care Forward?
Yes.
Yes.
Perfect. All right. I don't see any others.
Well, come on, give us really a tough question that Joe might not be able to answer. This is the stump the Joe section of the presentation.
Stump Joe. Let's play Stump Joe.
All right. Well, listen, we will make sure that we follow up with you. I'll have Joe's contact information in there. If you guys have any questions, just email them or phone us. We're here to help you. Our goal is to work in partnership with GoldenCare, support you as well as we can. You've got some amazing resources within the GoldenCare team. Leverage the group. Everybody here is looking to help you grow your business and serve more clients. And my parting comment to you is, I think largely the key to success is going to be in our ability to be proactive in reaching out to our clients, where unfortunately today, the large percentage of the long-term care business being done is being initiated by our clients. And if we can take the conversation to the client, get to them when they're a little bit younger, when they're more readily insurable, we could do some unbelievable things together. So I wish you well. Thank you for being part of our call. Lynn and John, thank you. Have a wonderful day.
Yep, thank you, everybody.
Thank you guys very much. It was a very good presentation. We really appreciate it. Don't forget, everybody, get a hold of GoldenCare here, 800-842-7799. And if we can help you, I'll turn to Joe and have him answer the questions for me. But everybody have a great day. Enjoy the weekend, and I hope everybody has a great holiday coming up.
GoldenCare is always here to serve you with new tools, new products, new ideas, and new innovations, and always the best support in the business to help you succeed. So give us a call at 800-842-7799 and check out our website at www.goldencareagent.com.